Ladies and gentlemen, good day and welcome to the HeidelbergCement Q3 and 9 months fiscal 23 call hosted by PhillipCapital India Private Limited. As a reminder, for the duration of this conference, all participant lines will be in a listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would like to hand the conference over to Mr. Vaibhav Agarwal from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Thank you, Aman. Good afternoon, everyone. On behalf of PhillipCapital India Private Limited, we welcome you to the Q3 FY23 and 9-month FY23 call of HeidelbergCement India Limited. On the call, we have with us Mr. Jamshed Naval Cooper, Managing Director, and Mr. Anil Sharma, Chief Financial Officer of HeidelbergCement India Limited. Due to certain unavoidable medical circumstances, Mr. Joydeep Mukherjee, Chief Operating Officer, has not been able to make on this call, and we regret for this inconvenience. I would like to mention on behalf of HeidelbergCement India Limited and its management that certain statements that may be made or discussed on this conference call may be forward-looking statements related to future developments in the current performance. These statements are subject to a number of risks, uncertainties, and other important factors which may cause the actual developments and results to differ materially from the statements made. HeidelbergCement India Limited and the management of the company assumes no obligation to update or publicly or alter these forward-looking statements, whether as a result of new information or future events or otherwise. Also, HeidelbergCement India Limited has uploaded a copy of the Q3 FY23 presentation on their stock exchange and its website. Participants are requested to download a copy of the presentation from these websites. I will now hand over the floor to the management of HeidelbergCement India Limited for the opening remarks, which will follow by interactive Q&A. Thank you, and over to you, Cooper, sir.
Thank you, Vaibhav, and a big thank you to all the people who have joined the conference today. I hope you have received and read the presentation what we have uploaded on our website. But let me take you through this presentation, taking you to on the highlights of our December quarter key messages. I'm very happy to say that the green power share of green power has increased substantially, and I think this is one of the bright sides of it, because this will help us in the future in a very big way. There is a 33% increase in green power. And I'm delighted that the team has done a good job. We continue to produce 100% blended cement, so this is one of the major highlights of us, and we remain focused on our CO2 commitment here, so this continues as such. Our volumes, have increased on quarter-on-quarter basis. Although there is a drop-off on a decrease on a year-on-year basis, but the reason is very simple, that we had some warehousing problems also, other than these things. So, but I think that is behind us. I think that we have overcome that. So these volumes, unfortunately, got a hit. Now we should be coming out of these woods. The cost increase has been about 9%, which has been partially offset by the price increase. So a long way to go for us to. Now with in this quarter, the costs would have come down somewhat because of the fuel costs have come down. So we should be able to garner a little bit of momentum on this account and do better here. EBITDA dropped to 339, to 339. That is mainly because of the power and fuel costs, which has increased, which is almost significant in impact on this. The other highlight, which is a positive side, is that Heidelberg continues to operate on a negative working capital. So this is one thing which we have the distinction. So and net cash is about 1.5 billion with us. Coming to the next point in the presentation, you can see how the green power has increased. So the team is doing a fantastic job of focusing on green power, taking a very responsible action, a very responsible behavior to ensure that we are compliant and we remain compliant, and we prepare our organization which is future ready for when CO2 becomes one of the major elements where we have to really we have to bite the bullet. Coming to the next thing is that, we have on a CO2 just to support our CO2 and also to support the clean and green environment. You can see the way we have done our plants greenery. We say now we have plants in plants and plants in plants. So this is where, we say that, we have made a difference to the whole organization, and I think this has helped us in reducing the ambient temperature in our plants, which we have the target to come to 2 degrees lower. So we are in many of our plants, we have reached that target, and we will continue to do better. The happiness quotient in the plant is better. The employee productivity goes up. So all these things have helped us in one way or the other. Coming to the next slide, you can see the biodiversities which are there. So being passionate about environment, I had to put these things in front of you so that you see that, we also make cement, but we also ensure that, the environment around us is kept in the best of its position, and we are seen by the society also as responsible corporates when it comes to maintenance of environment is concerned. CSR, our obligation to the society continues unabated. We are doing so much of work with our neighboring schools. You can see these pictures on health camps or whether it is school buildings, whatever we are doing. Now let's get to the focused area, which is our bread and butter, and also your area of interest, much more area of interest for you. I think you have gone through all the figures. We can discuss these figures, how they have impacted us. As I said, that the volumes are basically impacted because of a little bit of disruption, and the impact is seen. The cost elements which have been circled in red, they are a cause of worry for us because of the other elements of cost. But now I think we will be able to pull it out. Let me put it while we are here. Let me put it during the last year, that is calendar 22. We ran a program which was called as Mission Possible. Every plant was given a target which was with 10 years of historic data where we had done the best of our performance. The BDP, that is the best demonstrated practice, was taken as a benchmark. And then we gave these targets, and we worked along with our teams to see that how we can reach and replicate the same performances this year. And I'm very happy to say that our cement plants have done a fantastic job, both in terms of power and fuel, and these results will be permanently embedded. So this is not one-time change which has happened, but this change is permanent in nature, and we should be able to do lower gigajoule close to about 3.07, 3.06, and in the power also close to about 70 units. So we should be able to start doing this in future also. Coming to the next slide, you can see in this as the waterfall which we have created here, the major impact is on account of power and fuel. Despite consumption factors being improving, the cost of the input costs have been higher, and because of the inventory we carried for a higher cost inventory, so that has impacted us. But I think this is temporary in nature, nothing to worry. This will get reversed very soon, because we are fully focused and committed on seeing to that we can reduce our consumption factor. Coming to the next slide on 10. Net cash is about 1.5 billion, which I mentioned, and how it compiles and how it piles up. From in this year, 2 tranches of payments which will be having to given to the UP government, there is a loan which is an interest-free loan to us. So 336 and 629 will go out in this financial year. So this is where we stand. Coming to the slide 11, happy to inform you that under the government of Madhya Pradesh, state government had announced that auctioned certain mines which were adjoining to our mines. Since it was a close mines which were adjoining to our existing mines, there was interest for us to have it, and we bid also. We had to bid aggressively against this bid, and then finally we ended up paying 100% premium on that. But still, I would say it will extend the life of this plant significantly, and it will add more value, and it will open up additional scope for us to expand this plant in the near future, which we are taking. We have told you already that on line number 3, we have to do a debottlenecking. So now the team has been given the go-ahead. So now this year we will be doing some work on it and placing orders of the equipment. So the next year we should be able to bring this on stream. Coming to the slide 12, our road volumes have been, percentages been almost same, 49-50%. We always manage between road and rail, so nothing much change here. Premium products has always been a focus for us. Luckily, we were good enough, with our team's thought process, we could launch a new bag in between, like power is on the upper end side, and in between there was a vacuum. So we wanted to fill up this vacuum in between, because power now from 1st January it is 45 rupees a bag higher than the normal bag, and this is about 15 rupees a bag, Primo, Mycem Primo, which is there. So we positioned one more product in between, and that has seen good traction happening in the brand area. So I think the team will be able to get more and more volumes. There is no cannibalization, I would say, on Mycem Power by introduction of this. Mycem Power continues to shine in its own glory, and Mycem Primo is creating a new segment, or reaching out or building a new customer segment for us. Coming to coal percentages, I don't want to talk too much on this because this is a technical issue. Ultimately, the team has to manage the lower possible cost on whether it is coal or petcoke. Today, the coal and petcoke are close to about 660 to 670 per gigajoule, which is almost, now you can switch over between each of them, but then there are economically advantages and disadvantages of using coal and petcoke. Higher ratio of petcoke has its own advantages and disadvantages, and vice versa for coal also. So we internally we manage this, and we see to it that we can get the lowest possible of fuel cost for our per ton of clinker. Trade continues to be around 75-76, which is there. But the focus in future will be to more focus on trade and not on non-trade. Despite that, knowing very well that the next year in 2024 there will be a government push, more and more push on infrastructure, and there will be more and more cement which will be required under non-trade. But since it is a price difference today, in this last quarter also, the price difference has been more than 600 to 650 rupees a ton between trade and non-trade in realization. So I would say that it is our duty to see that we sell our whatever product available at the best possible price. But anyway, we can always rejig this. Happy to inform you that the Apex India Safety Award was conferred on our Jhansi plant, and this is one more feather in our cap. And now coming to the outlook, see, India remains. We all know that it is the fastest growing economies in the world, and I think it will continue to stay like this. Cement demand in government projects will increase in 23 because seeing that in 24 you are having the elections, so, and the budget is also been supporting that. It is complementing this by the government's allocation, the way they have come under Awas Vikas Yojana, and whether it is infrastructure or it is logistics, transport, 100 logistics excellence projects have come in. So I think this is one area where we will see. Rabi crop has been good, so it will pep up the rural demand. Fuel prices are softening, so there is a little better improvement in this, which we have. And the only fear is that if the government demand does not come up, then we can have a little bit of a problem. But I don't see it relenting in any way in this quarter or the quarters to come in the future. The GST, there is one silver lining here, that there is a probability of a GST reduction. But yes, I say that there will be a reduction, but it will be responsible, the cement manufacturers will be responsible for giving away this GST back to the consumers. So it might have its own, it will become more affordable. If it becomes more affordable, if we can increase the consumption alone by this method, I think we should not become greedy about taking any share out of the GST, and we should look at, increasing the consumption of cement. That will be my way of looking at it. Last but not the least, let me inform you that this will be my last address to you as a managing director of the organization, as I have decided to demit office on 31st March. It has already been announced to the SEBI and to the stock exchanges. We have announced it. The board has approved my resignation, accepted my resignation, and agreed to relieve me from 31st of March. Post that, Joydeep will take over as the managing director of the organization. And right now, Joydeep is as a chief operating officer already appointed for there. There is a period of takeover, and I will ensure that the entire support is given to him, and then he takes over very smoothly. The transition becomes smooth on this. So this is all I have to say, and a big thank you to all of you for being supportive all the time, and look forward to your continued support in the future too. Any questions here, very happy to answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. Participants are requested to use handsets while asking a question. Anyone who has a question may press star and one at this time. First question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you, sir. Sir, just wanted to know in terms of the volume decline that we have seen. So not only for this quarter, even if I look at for the 9 months also, we have seen a 9.5% volume drop. At the same time, in terms of the trade share for this quarter has also declined significantly to 76% versus last quarter Q2 FY23 was 83%. So 7% decline there, and in terms of the premium share also has gone 40% to 240% from the 55%. So just wanted to understand what is going wrong, and how do one can see what's your outlook on this?
So let me answer your question in the reverse order. In terms of our premium, there was a accounting change. Okay, we had introduced this new brand. Okay, and there was some method of computing which we were doing, so that is not actually 57. Now this is a true picture which is on the total trade volume. So you can now take this figure as a correct figure rather than taking the 57. There was a computing which the way it was computed was different, and this time the computation is different. But you can see that there is a consistent growth in the blended in the premium products which has been there. If you look at the volume, it has been on a consistently growth. So that if you take at the absolute volumes also, you can see that difference. Coming to the volumes of last 9 months, yes, I agree with you. And last quarter we lost, of course, as I mentioned to you, because of some warehousing issues, some small issues which we were not able to manage. Some changes in the warehouses has happened. Some people have moved and here, so some days of loss of sales which has happened. Coming to the earlier quarters, yes, but now you should also look at that how we have improved over quarter on quarter. Okay, on quarter we have improved by almost 10%. So there is a trajectory of an improvement. So I would say that the past has relevance, but the trend also has a much more to be looked at it, that is the company doing its job to ensure that it comes back on it, brings its trajectory back and of growth. So I think that the organization is there, and now we are working with more inputs with some more advisors and consultants on market issues, where in this quarter the work has begun. So I think in the quarters ahead you will see some very positive results coming out of the efforts of the management. I'm sure you will see that. So I'm not worried about this, but yes, as I mentioned to you that capacities have increased. So sometimes what happens, some competitors become very aggressive. So some people are there who have hit our volumes adversely by bringing the prices at a very, very low prices. So the team was not prepared all of a sudden to change its product mix or, I would say the pricing strategy, and that is how we get impacted. But these are all temporary, I would say. These are tactical issues. Any new brand comes, sometimes we are unlucky, somebody else will be unlucky, somebody will focus in my market, somebody next time I will focus in their market. So it's a battle which keeps going on in a fair and competitive working environment. There is no harm in being competitive and trying to protect your share. I am sure the Heidelberg has history stands testimony to the fact that Heidelberg has always remained on a good trajectory. We have delivered years and years of continuous improvement in volumes. I am sure we will bounce back, and should not be a problem.
So, sir, continuing on this, so how do one see the fourth quarter in terms of the volume? So this quarter we did 1.1 million in terms of the volume. So fourth quarter, how do we see? So as a just wanted to understand as a full year, how much decline one can see, and at the same time, when we are seeing there is an accounting issue in the premium share. So is it possible for you to release the historical quarterly premium share with the revised accounting to make it more comparable?
Shravan, we will give you that, not a problem. How we computed it and how we arrived at it, that we will give you that detail.
Yeah.
Not a problem.
So in terms of the fourth quarter, how do we see in terms of the volume?
So in the fourth quarter, I am sure that there will be a positive improvement only. I don't think we should be anywhere in the negative.
Okay, and in terms of the pricing, so there also this quarter we have seen a decline in the realization. So two things: have you seen any price increase post December? And the current prices, are they still lower than the average of the third quarter? And the last is on the costing, power and fuel Kcal basis. What's the cost for the third quarter on Kcal, and how it is trending currently?
So on the cost, on the side of the cost, we are better off than last year. So we will see a positive impact on the cost side. On the price side, I think the price should start looking up. Has started looking up in some places. In South, it has started moving up. Now I can see that this trajectory will continue in Central India also.
And is it possible to share the Kcal cost for the third quarter and what it is currently trending?
Okay, I can give you.
In the December quarter, this from kilo calorific value, it was around 2.85 rupees.
285.
And we have seen that in December quarter, it was slightly lower than our September quarter. And considering the softening of the imported petcoke and coal price in the import market, we also foresee that there may be some slightly reduction in the coal and petcoke prices in the March quarter.
That's right.
Okay, got it. And on the Gujarat expansion, anything you want to highlight, sir?
So on the Gujarat expansion, the TOR, we have not yet got the TOR, but we have started the data collection. So the December, February end, by February end we will get, and by March we should be able to go for a TOR. So this is on the right path which we are going. We are talking to the government also on this. Hopefully we should see that the project, we collect the data and we can get our TOR and start some activities there.
Oh, okay. And you mentioned, sir, the debottlenecking. So what would be the in terms of the quantification, how much increase in the capacity at grinding or the clinker level are we looking at, and what kind of a capex are we looking at?
Of 250,000, 200,000 tons of clinker should be additionally available to us.
Sorry, sir, 200?
2 lakh. 2 lakhs.
Okay, 2 lakh. By when?
That will happen in only 24 now. Because, the machine in the placement of equipment and the delivery period of the equipment itself is long. Construction is not a problem. The project is ready with us. Now we have to apply, because when the capacity goes up, we have to apply for some approvals also, for the license also, for the capacity to increase. These are the problems which are statutory in nature. We cannot circumvent that.
So currently, what's the clinker capacity? So are we operating the Karnataka one clinker, or we are not operating? So what's the current clinker capacity?
Karnataka is not operating, only Damoh is operating.
So the capacity is 3.5 or 3.1 million ton?
3.1.
3.1. Okay.
It is Karnataka. Central India is 3.1.
Sorry, sir, I didn't hear.
So, not including Karnataka, the total capacity, clinker capacity of the 3.5, and Central India it is 3.1 million ton, which we try to increase by the 2 lakh, 3 lakh ton per annum clinker capacity during the debottlenecking at Central India.
Okay. Thank you.
Thank you. Anyone who has a question may press star and 1 at this time. Next question is from Ritesh Shah from Investec. Please go ahead.
Yeah, hi sir. First, thank you so much for all your insights so far. You have been pretty awesome. Thank you again. So just 2 questions. One is on the industry. Do you see that LC3 will actually see light of the day? That's the first question. Is it the industry which is against it? How should we understand that?
Which one? I could not get you.
Sir, calcine clay.
Calcine clay, or LC3 cement. Okay, this is your question. I think the calcine clay is a good option, but the amount of type of clays available in our country are consolidated at certain locations. So getting calcine clay cement making for everybody is not an easy task. Okay, so it is not an economical solution. First, number 1. So you have to be closer to that, because there is these clay blocks what are available are not homogeneous in nature. They are very heterogeneous. So you to get a good clay is also equally difficult. Another thing is, when we talk about calcine clay cement, okay, we have to also understand the demographics in which we operate. Okay, the quality of cement is little different from the normal cement. So you can use those type of cements for masonry cements, okay. But if you start casting concrete and things like that, then you may have a problem there. I would say very simple that at the moment we may make hundreds of products abroad, but the literacy level has to be equally scaled up. Because you use the wrong product at the wrong place, then you will only blame the company that and the persons don't know to read and write. The masons, the user community is very, 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 I would say, not educated, or they don't take care of those things. Responsible behavior on the field is very lacking. So I think an option. Anyway, for us also in Heidelberg, it is difficult to make LC3 cement because we are not closer to the clay blocks. For some other people who are trying and testing, but nobody has so far placed the product in the market as per my information. In case if you have some information, somebody has placed it, happy to learn and understand from them.
Sure, sir. I'll connect with you separately for that. So my second question was, when should we expect any corporate action when it comes to Heidelberg and Zuari as a single entity in India? I think Zuari is a behemoth. There could be a lot of synergies which are there at the same top level management which is running both the units. How should we look at this going forward?
So Ritesh, as I mentioned, I'll repeat the same thing. There is nothing new which has happened in this, but yes, the group is working on this to merge these 2 units. It's a question of time. So we will merge these 2 units under one entity so that we have the financial fungibility and which makes sense for us rather than running 2 units. But that will happen. It might take another year and a half or so. I would say on a safe side, I am telling you on a year and a half.
Sure, sir. And sir, just last question, I'll just squeeze in. Sir, what is the rationale behind the new limestone lease? Are we looking at lease expiries in Central India? That is why we went for this incremental lease? Or is it a basic augmentation of resources? How should we read this?
So Ritesh, our licenses are valid till 43. 2043 existing ones also, and this new is a top-up. This gives us more room because it was adjoining to us mines. Why should we not take it?
Okay.
Yes,
So do we have
our presentation, the presentation also we have given the rationale about this mining lease. It not only increase the life of the mines or for the existing operation, but also it gives us a kind of opportunity to further expand our clinker capacity as well as the cement capacity. So at this moment, we are selected as a successful bidder. Now we need to complete the entire documentation part and process part, which generally takes around 2 years and 2.5 years to complete and get the mining lease execution, and thereafter then we need to sign off this mining development and production agreement. And once we complete all this process, then in the meantime we'll explore possibility whether we want to go for the higher life of the plant, which is currently maybe around 25-27 years, which may further add by 20 years, or we can also have the opportunity to increase the clinker capacity. So it is the kind of win-win situation for the company that not only it will safeguard limestone reserve, but at the same time it increase the capacity of the company.
Sure, sir. That's useful, sir. Thank you so much. Wish you good luck.
Thank you. Anyone who wishes to ask a question may press star and one. Next question is from Prateek from Jefferies. Please go ahead.
Hello. Yeah, Rahul sir, my first question is on your volume numbers. So can you just explain a bit more on the volume loss to this quarter because of logistics issue, and how many days of impact was there during the quarter?
About 10 days of impact is there in some local areas, which are high volume areas are there. There was an impact. I mentioned it earlier also. I have nothing more to add on this.
Sure. Okay. And in terms of other expense during the quarter, while on a year-on-year basis it looks like sort of stable, but what does go into other expense on a Q-on-Q basis, which is impacting other expense more in third quarter versus like other quarters?
So you are right that other expenditure is compared to December 21 quarter, it is more or less on similar amount. September, as compared to September, it has increased, but you will also appreciate that during the December quarter, generally we take our kiln plant shutdown. So this amount has increased on account of stores and spares and consumables. During this time, generally we change our refractories, we change our grinding media. So this cost in December quarter, always you will see that okay, other expenditure as compared to September quarter is high. For per ton basis, yes, because of some volume impact of 2 to 3%, it looks that okay, per ton basis is higher by maybe 10, 12, 20 rupees. But in absolute term, this is the more or less on the fixed nature or maybe semi-fixed nature. So this amount is similar to what we incurred in December 21 quarter.
And one last question on capacity. So we are looking at raising 3.1 million ton capacity or 3.5 million ton capacity by 0.3 million ton by FY25, and cement capacity goes up from 6.2 to how much?
This 200,000 tons of clinker will result into close to about 3.5 lakh tons of cement.
But is it an incremental capacity or just you sweating the capacity more, current capacity more?
The current capacity will be incremental capacity only. This is added, no?
No, I mean, are you putting more names? I mean, we have like 6.26 million ton capacity, which seems like high versus your.
It will go up. By addition of this, the capacity will go up.
Okay. So 0.3 million ton expansion in cement and 0.2 in clinker by FY25.
Yes, almost. Can be better because the project report is given this, but normally we try to always over exceed this because the manufacturer will stand guarantee to a certain amount based on the equipment. But normally if you look at our kiln also is a 5,000 TPD, but we shoot it at about 5,700 consistently. So I don't want to give you those figures because normally these are the benefits which we are as a management are supposed to derive out of an equipment. So that is where the technology can give you a certain amount of assurance, but again your management capability can drive it to a better level.
And on the brand positioning, your like with Mycem Power, you said 45 rupees higher by versus a normal brand, and Mycem Primo is higher by 50 rupees. How does Mycem Power like compare to like other grade A brands in your market, like let's say Ultratech and ACC, and maybe JC Cement brand which might be new for your market?
Yeah, I cannot tell you because this is a premium product. Every company has a different placement. Okay, so not many companies are into this, but there are some people who are there. Their share of volumes is some companies are doing more volumes, some companies are doing lesser volumes. Today, I would say most of the brands in this premium segment should be anywhere 20 rupees minimum above their normal brand. 20 and anything it can go to 60 also. So this will be the range. Some brands will price their product 20 rupees higher than the normal, and some companies may go in between 20, 30, 60, like that also.
No, I was asking regarding Mycem Power's pricing versus Ultratech's normal brand in the market.
And for us, Ultratech will be the normal to normal. If you are talking about it, is we will be close to about 2, 3 rupees, 5 rupees difference here and there.
So Mycem Power will be like 45 rupees higher than Ultratech's normal brand.
Yeah. Any day. At least 30, 35 rupees more. Even if you are suppose in some markets we will be 5 rupees or 10 rupees lower than Ultratech in some markets where they are stronger. I would say you reduce this 10 rupees from the 45 and it will be close to 35.
Sure, sir. These are my questions. Thank you.
Thank you. Anyone who has a question may press star and 1. Next question is from Jasprit Arora from Equentis PMS. Please go ahead.
Yeah, hi, sir. Good afternoon. Thanks for the opportunity. The fuel cost inflation for the quarter is well understood from the slide. Possible to give the similar spike in the 9 months? 9 months raw material cost is up. Overall cost is up 700. How much would that be fuel and the others?
We'll have to calculate that. 9 months I'll have to calculate. I don't have it readily available.
But I think in public result we have given the 9 months also. YTD figure is already there.
That's why I'm saying the gross realization, total cost, EBITDA per ton, all is there. So total cost has gone up 700 rupees per ton, 9 months, over 9 months. How much of that is fuel? So for the quarter, fuel is up 300 out of 370 for the quarter. Just trying to understand. I mean, I can just look at the last 3 quarters. I just thought in case you have that handy.
Average fuel cost is, like previous quarter was the fuel cost per ton of cement was 1357. Prior to that, in March it was 1096, 414, about 1400, then 1350, and then this is 1265, close to that, December quarter. 42 हो गया ना over last year, because तुम March to December quarter ले लो, 980 was the December quarter, okay, and this year it is 1260.
We need to calculate per ton basis.
Per ton fuel cost per ton of cement है ना कितना? 980 to 1754. हाँ? 1260 to 1754. 980 था last year.
So almost 50% increase. Maybe 40% increase.
40%
increase is there. 9 months versus 9 months.
9 months.
Jasprit, when we compare the 9 months YTD December 2022 as compared to December 2021, roughly on the face of the published result, it comes around 40% increase on per ton basis. Maybe we need to little bit adjust on account of inventory change, but inventory change also not significant in 9 months vis-a-vis last year 9 months. So we can take that 40% increase in the fuel cost is there.
Okay. Okay. Possible to share what's the current trend versus the last quarter average? How much softening, if at all, we would have seen?
In December, it has softened over September, and I think in the March quarter, it will further soften.
Maybe we can take the ballpark figure of maybe mid-digit figure of the percentage of reduction in the petcoke and fuel prices in March quarter. It things look like, because we have seen that, okay, imported petcoke and imported coal prices has reduced. And that should also translate into the domestic market. And we have also seen of late that Coal India also increased a little bit the availability of coal for the cement company. So I think on the fuel side or the power and fuel side, we should not foresee any now further increase. Rather, it should be the other way around, which should be beneficial for the company.
About 10% reduction you should expect in this quarter, next quarter.
Quarter on quarter, you think it could go down by 10% average?
8% from a safe side.
And on the realization front, anything you can share how the current at least the month year till date, Jan till date, is there any improvements in realization?
I would say that just recently there was a little bit of shake-up in the price. I think we should be able to, we are almost flattish right now, as of now. January was a little flattish.
Okay. And lastly, sir, this Gujarat, this new greenfield project would mean that it's. I'm just trying to understand what are the where are we and in terms of the so-called clearances and equipment ordering and subsequent whatever. So it's more like a 4-year project, or it's much at a much advanced stage.
No, it will take its time, because right now the data collection, environmental data collection is going on. So that takes about 3 months of data collection. So that will get over in February. We will be able to get the report by March. We will be able to go for TOR in the month of May or so. Okay.
Okay.
And once TOR is completed, that will take us about some more time, about a year's time to get the results. In the meantime, we will have to start working on the project, and we'll have to do a little bit of right now so far we have not bought any land or anything, but maybe in the next year we'll have to look at the next financial year we'll have to look at doing something there. So it is a long time process will take place. It will not happen overnight. Although the project is we are wanting to ready to go on this.
Okay.
But then there are certain limitations always there, because statutory clearances and all these things are not within our hands. Our June application is still pending with the government, and we will be getting it done in this week or so. Get some hearing from them, and we will be able to convince them on certain things, so we can move. So it takes its own time. It's putting up a greenfield project is not a cakewalk. It's quite a tough uphill task.
Yeah, I'm sure. Yeah. But I guess you've been working on it for pretty fair amount of time also. So it's not that it's the preparation started a year back.
We can go for a mining plan till we get the approval from the government. So the June application, once it comes to me, then I will go for a mining plan. That will take another 6 months. Then I will go for a TOR. Then I will go for it's a chain of events which we have to have nested inside. So if you make a bar chart for the timeline, we see that at any one point we get stuck up, everything comes to a halt.
Sure. And would you be able to comment on the size, or it will only
3 million ton.
Sorry.
3 million ton.
3 million ton, you're saying, right? Okay.
Yeah.
Okay. No, typically the way we've seen companies do it, it's like they plan for a much bigger. Obviously, I was just trying to understand, could it be a 3+3? That's the way you could ultimately envision it, or you're just saying it would be only 3 million tons for? And if it's 3 obviously expandable to another 3 after a couple of years.
The thing is, the limestone reserves are huge. You can go 3+3+3, no problem.
Okay.
But just to look at first, let us first cross the first stage of 3 million. I would say I will not give you some assurances which
Sure.
if you, because today because this comes closer to the coastal area, so you can't go below the sea level, mean sea level. You can't go below that. So the government does not approve so easily. But future they will approve, I think. So that time you will have more reserves out of it. But first let us get the 3 million ton going, which will take us another 3.5 years to 4 years to go, I would say.
Got it. Thank you so much, sir, for all that answering, and best wishes for your career ahead.
Thank you.
Thank you. Anyone who has a question may press star and 1. Next question is from Sanjay Nandi from Ratnabali Investment Private Limited.
Yeah, thank you for the opportunity, sir. So can you throw some lights on the current pricing of the pet coke?
Pardon?
Can you throw some light on the current pricing of pet coke?
Current pricing of pet coke.
I think a landed basis, it may be around 20,000, 21,000 per ton.
21,000. And what has been this level on the exit of last quarter?
Last quarter it was expensive by around 2,000, 2,500.
2,000. Thank you, sir. Thank you so much, sir.
Thank you. Next question is from Utkarsh Nupani from Haitong Securities. Please go ahead.
Yeah, hi. Good afternoon, sir. So first question is that we observed that the cement demand in the central region has been quite weak for the past few quarters. Can you throw light why the demand is weak in the central region and how it is likely to shape up in this current March quarter in FY24 over a week base?
Yeah, I think the MP government was a little weak on government demand. Now I think this will start. After the recent investors meet called by the Chief Minister, I think there is some traction which we are going to see in the near very future. Plus there are state elections also there. So we can expect some good movement to happen on cement. This year the rabi crop is good, so I 100% tell you that the rural demand is going to be significantly well. You can see this going to happen very soon. So post Holi, you can say that, after this Holi takes place and the grain starts coming to the market, April should see a very good movement. March government should do the spending part of it. I think the budgets will expire, so the February and March we should see by between end of February to March end, I think, and even till first fortnight of April, because the price will keep going. I think we should see a very good demand coming up.
Okay. Sir, can you quantify what would be the demand within central region in FY23 and what is our expectation for FY24?
Well, the expectation for 24 is about 7%.
Okay. Despite the weak base of FY23.
Yeah.
Okay. And what would be for FY23, sir?
FY20, just let me check up. It should be about 5.5%, 6%.
Okay. So second question is that our realization has gone down by 2.5% on a quarter-on-quarter basis in December quarter. Can you give some sense how the cement prices have behaved in central region in December quarter, sir?
December quarter for has been okay. I think there was some volume pressure was there because of the festivities. So there was a price pressure was there, but now I think that is easing up.
So whether the cement prices in the entire region has gone down? Yeah.
Because the biggest problem is, the capacities are coming in on stream. Every place their product in the market. And I don't blame anybody for that. If the competition is becoming severe, okay, the first victim of this is the price. So any region which sees a significant capacity add up, you look at it, this market in 2020 was close to about 60 million tons. Okay, by 24, 25, it is going to be about 90 million tons of capacity, which is going to come between 65 to 90. It's almost a significant jump in the capacity is getting added into central India. And this is building up a pressure. I think, but anyway, for HeidelbergCement, I always tell my team that, We should not be bothered about what the competition comes in. We are the senior citizens of this state. We have been here. We should not be able to. We should be able to retain our channel partners and our customers better than anybody else can do. A newcomer should not be a threat to us. I would say he is a welcome to us. At least they will bring some prosperity to the state. But as a member of as a senior person operating in this region as an organization, we are senior. I would say in this market, and we should not be worried about that. We have a brand equity. We have a good placement of product. We have got a good channel partners. I think a little bit of tweaking with them, a little bit of working with them. Because during the COVID period, we did not do many of the things like, meeting dealers. The dealers' conferences were avoided. Some gift schemes had come down. Advertising had not happened. Now all that is gone, and now in this from now onwards, we have started set sail to see to it that we come back with a vengeance in the market.
Okay. Sir, if I understand correctly, you are saying that the retail capacity is likely to go up from 65 to 90 million tons, whereas the demand is just likely to grow at 7% rate. So does this mean that this pricing pressure which we saw in December quarter is likely to persist over the medium term, sir, because of oversupply situation?
This is the capacity, almost 3 million tons of capacity getting 4-5 million tons of capacity getting added every year. So it is not 30 to 31 years, is not become in 1 year. It has happened in the last 4 years.
Okay.
And maybe it will continue. Maybe next 2 to 3 years it will continue, maybe 4-5 million ton every year.
So I would say that okay, but look at the shortage of clinker. Today the market is running short of clinker in this region. People are selling clinker, more clinker than cement.
Okay. And sir, lastly, we were planning to come up with a greenfield unit in Zuari Cement in Karnataka. Can you throw light on that, sir?
That was you are talking about Zuari part.
Yes, sir.
Not HCIL part.
Regarding Zuari Cement, sir.
Zuari, I refrain from commenting on a call for HCIL.
Okay, sir.
Sorry for that.
Yeah. Thank you, sir.
Thank you. Next question is from Kamlesh Bagmar from Lotus Asset Management. Please go ahead.
Yeah, thanks for the opportunity, sir. So one question with regard to our tax incentives or GST incentives, which are going to expire in this February. So can you highlight how much was the incentive which we had booked in the 9 months and the last quarter?
So I would say it will set us back once it is withdrawn. It will set us back by about 40 rupees a ton.
Okay, so 40 rupees per ton margins would not be there post February, provided the prices remain the same.
It is considered 2 rupees a bag. Nothing big. Yeah. You can pull this out anytime.
Yeah. And sir, secondly, it's assuming in Gujarat over next 6 to 12 months, say large capacities get announced. So would we be very committed on our this Gujarat projects or not? Because I believe that there are say 2 to 3 big projects are going to come up on the capacity addition in Gujarat. So would we be committed on the project which we are looking at? Because anyway, over the last 2-3 quarters, we have been saying that this particular project is going to take more than 3 to 4 years of time. So would we be committed on that? If say 8-10 million ton of new capacities get added or announced by our peers in the Gujarat market?
No problem. We still say everybody is putting capacity. We will also put capacity. Where is the problem? I don't see any reason for us shying away from this.
Okay. And say on the mine which we have won, sir, in adjacent to our current location in central market. So would we be announcing any capacity addition or would it be just replacing our current mine?
No. The current mine is there. This is in addition to that. So which Mr. Sharma also explained that, and in the presentation is there that, we are looking at that we have 3 lines in Damoh. Line 1, 2 and 3. Line 1 is a very old one, which is now very old, which is 1600 TPD line. Okay, it is a very good opportunity for us to look at scrapping that line and building a new line in that place, which will be more fuel efficient and everything. Plus, this mines will support that to accelerate us in the central India, because central India we enjoy a better synergy than anywhere else. So we will take a call on this, but it is again, as I said, 24 months down the line. First, let us get the agreements done, paper done. This now line, we will start buying the land in that area. That is not a problem, because it is adjoining and we have to open up the mines. The no sooner this consent is given to us and papers are there, we will do that. So, I think this will be a good occasion for us to add capacity, and a capacity of a better quality.
Mm-hmm. And so the current mine, how much reserves do we have, or how much years of life can it support for the current capacity?
Current capacity is, right now the existing mines what we have, it covers close to about 24-25 years of limestone reserves we have. We are, as I mentioned in my earlier comments also, that we are using a very significant amount of limestone rejects which comes out by supplementing it by sweetener. So we are using that to extend the life of the mines. If I might have spoken to you, or you might have heard me about 4 or 5 years also earlier, that when I mentioned that we have been able to increase the life of our mines by almost 7 years.
By using the rejects, yeah.
So and now only little bit of problem is managing as the mines we are approaching the end of the mines on certain sites where the mining plan has been made. Maybe there was a little bit of geological miscalculation which has happened, so we are getting little bit of more improvement on LSS. When we do it, we have to buy little more sweetener. But in this quarter, the sweetener has gone up little bit. Now we will try to control that sweetener also in this quarter and the corresponding subsequent quarter also.
Okay. Thanks a lot, sir. Thanks a lot.
Thank you. Anyone who has a question at this time, may please press star and 1. Please note that this is a final reminder for questions, and no further reminders would be placed after this. Next question is from the line of Harsh from ICICI Securities. Please go ahead.
Yeah, thank you for the opportunity, sir. I have just one small question. What is the CapEx budget plan for this ongoing fiscal and for FY24? Thank you.
For CapEx,
generally we keep the CapEx into two parts. One is the sustainable CapEx, and that is around 40 crore rupees for this fiscal year as well as the next fiscal year. And on top of that, next year there will be around 15 crore rupees CapEx on account of this clinker debottlenecking. So we can consider that next year this CapEx will be around 55 crore rupees for the fiscal year,
including AFR.
Thank you.
Thank you. Next question is from Vishal Periwal from IDBI Capital. Please go ahead. Vish, your line is muted. Please proceed with the question.
Yeah, I'm audible now?
Yes.
Yeah. So thanks a lot for the opportunity. I think 2 questions particularly on the pricing front. How has been the pricing so far in January and February for us in our region? And second, you mentioned South region has seen a bit of a price hike. So which region and what, if possible, to quantify that, sir?
Well, the entire region south below, I think the prices have gone up by about 125 to 130 rupees a ton on an average. Has gone up very recently. So I can see that there is this sort of a movement when it happens in south. Central also starts seeing it. January was flattish. February should improve. So far we have not seen too much of an improvement in central India. But let us see. Expect that some price hikes we should be able to take now. It all depends on, because today also the market is running at a little softer end. Okay. You would say that the capacity utilizations in central India are little better off than south, but then central India was operating at 80% plus capacity utilization. Right now it is subdued to around 75, 73. So I think once the capacity utilization starts improving, we will see for your company, for HeidelbergCement, we are doing a relatively good capacity utilization in so far as of now.
Thank you. Next question is from Tanuj Pandya from Dolat Capital Markets. Please go ahead.
Good afternoon, sir. Wanted some data points. What is the CapEx for quarter 3? Yeah.
Oh, yes. We need to say because we do not report on quarterly basis, but it is a very normal CapEx with not significant. Maybe 5, 6, 7 crores. We have done it. 7 crores. But not so significant during this quarter.
Have you answered your Tanuj?
Yeah, sir. And what was the lead distance for third quarter?
About 350.
Okay. Thank you, sir. That's it.
Thank you. Next question is from Pranay Kapadia as an individual investor. This will be our last question for today. Pranay, over to you.
Hello. Hello. Thank you for giving this opportunity. Can you hear me?
Yes, please go ahead, Pranay.
Yes, thank you for this opportunity. I just have a small question that looking at 3 to 5 years horizon, what is the compounded growth that you see in terms of top line revenue? That's it. Thank you.
3 to 5 years top line.
It should not be less than 5%. Even if we grow as per the market, as well as there will be some inflation on account of pricing, so we can say 5 plus 5, so 10% should be there.
Easily.
Okay.
We will also at this moment last year, or when we talk about the calendar year 2022, the cost has increased significantly. It was not less than 20% for anyone.
18
where the price has not increased in that direction. So if the economy works in the same direction, there should be with the lag effect of 6 months, 12 months, price must increase. So we are very much hopeful that and pretty convinced that next 3 to 5 years the top line should increase more than 10% compounding growth.
All right. Thank you so much. All the best.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference back to Mr. Vaibhav Agarwal from PhillipCapital India Private Limited for closing comments. Thank you, and over to you, sir.
Yeah, thank you. On behalf of PhillipCapital India Private Limited, we would like to thank the management of HeidelbergCement India Limited for the call. And we'll also like to take the opportunity to wish Mr. Jamshed Naval Cooper all the very best for his future endeavors. We also thank all the participants who joined the call. Aman, you may now conclude the call. Thank you very much, sir. Thank you.
Thank you very much, everybody. Thanks a lot.
Thank you very much. Ladies and gentlemen, on behalf of PhillipCapital India Private Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines. Thank you.